I think that this is just going to be a complete disaster when it ends. And as I said before, the only way it ends is with MicroStrategy going bankrupt. I don't see how this can end any other way other than the bankruptcy of this company, because their whole business model means they got to keep pushing up the price of Bitcoin and borrowing money to do it. And the minute they run out of the ability to borrow money, then the whole thing collapses, because they are the big buyers. And without them, this whole thing collapses. Now, I know they're hoping that the U.S. government becomes the next biggest buyer to bail out MicroStrategy. I don't think that's going to happen.
In today's news recap, India's gold market update. Festive buying holds ground in the face of high prices. Gold extended its record-breaking streak into October. Momentum softens post-U.S. elections. Gold continued its rally in October for the fourth consecutive month, hitting multiple fresh highs and closing the month with a gain of almost 5% at $2,779 per ounce. The price rise was driven by event risk and uncertainty surrounding the U.S. elections, along with escalating geopolitical tensions, which outweighed the higher opportunity cost for gold on account of a stronger U.S. dollar and higher bond yields. The rally in gold paused post the U.S. election as the dollar strengthened and Treasury yields rose. In fact, both international and domestic gold prices have fallen by 8% since the end of October. Despite this recent pullback, gold remains one of the best performing assets this year, with a YTD return of 17% in Indian rupee terms at the time of publication. Gold in the domestic market has been trading at a slight discount to its international counterpart since mid-August, reflecting a balanced demand-supply dynamic. Following the sharp import duty cut in July, the flow of smuggled gold into the country has almost ceased, making way for official imports. Despite record high prices, consumer buying during Diwali was strong in both gold jewelry and bars and coins. Markets and media reported higher footfall at jewelry stores and robust buying of coins via online as well as offline platforms. Promotional events and marketing campaigns undertaken by jewelers to lift sales. Indian gold ETFs continued to attract strong inflows in October, fueled by a favorable gold price momentum and increased volatility in domestic stock markets. The long-term capital gains treatment for gold, which was announced in July, has provided a continued boost, as reflected in the significant rise in inflows since that time. Now, we'll show you more clips, but first, check out our exclusive Black Friday VPN deal. VPNs are an essential way to keep your data private and secure, and with this massive discount, it'll cost just a few bucks. It's a no-brainer. Plus, you'll get 3 extra months free and a 30-day money-back guarantee. Check the link in the pinned comment. Don't miss it.
Anyway, I wanted to also mention something, too, about gold, because I was looking at these statistics just to put everything in perspective. You know, when we left the gold standard, in 1971, Nixon had devalued the dollar twice. It was $35 an ounce. And there were a couple of devaluations before we actually, cried uncle and just closed the gold window. But the official gold price is still $42.22. That's what's on the books. Now, the market price of gold is a little bit better than $2,600. It's actually been rising here last couple of days. It was up about $50 yesterday, up another $20 today. So right now we're about $26.35, but we're still well off the highs that we hit before Trump. We got closer to 2,800. We got 2770-ish. I forget exactly where we were, but the market price of gold is a lot higher than the official price. Now, since we went off the gold standard in about 1971, the money supply has increased by about 8,500%. I mean, 22 trillion or something like that. So we've had an explosion in the money supply that has far outpaced the increase in the gold price. So if we were to return to a gold standard today so that the dollars were backed proportionately by the same amount of gold that they were backed by in 1971, right? We would have to revalue the gold price above $80,000 an ounce. That just shows you how badly the dollar has been devalued ever since we severed the link to gold. And to go back on a gold standard would require $80,000 gold. That would be the new price, right now at 2,600. So gold has a long way to go if we are to ever go back on a gold standard. Now, the people say, well, why be on a gold standard? Just be on a Bitcoin standard. The Bitcoin standard isn't going to work, but the government is no more likely to want to go to a Bitcoin standard if somehow it had to have Bitcoin backing all of its money, because the government doesn't mind create Bitcoin either, just like it doesn't create gold. It has to get the gold, but it's not going to move. We're not going to move to that standard. That's absurd. But it also shows you the argument that, well, gold, it's all a monetary premium. It's not. Gold is trading for, barely above the cost of, mining it still. Yeah. Finally, we got, a few $100s. It costs a lot of these gold mining companies $1,600, $1,700, $1,800, $1,900 to mine an ounce of gold. And they're selling it for, $2,600. So it's not a hugely profitable business yet, because gold is still ridiculously cheap relative to the supply of money that exists. But it shows you what the government was able to do once it was no longer disciplined by gold. That's why the government has grown so big. That's why the debts have grown so large, because what was preventing all that was removed. And the Bitcoin crowd says, see, that's an example of gold's failure, because gold failed to do its job. No, gold did its job perfectly. It was the government that failed to stay on the standard. The government went off the gold standard, and the courts allowed it. The public allowed it. While we were on a gold standard, government was held in check. Now, yes, we started to veer off that in the 1960s with the war on poverty and the Great Society. And then the market tried to discipline us. Europeans, de Gaulle in France, started to ask for their gold back, right? So the market forces were going to work. They were going to rein in government spending and excess deficits. Otherwise, we would have lost all our gold and the dollar would have imploded. But rather than obeying the market forces, we just abandoned the gold standard. That's not a failure of gold. That's a failure of people, men, women. It's a failure of government. The government refused to adhere to the gold standard because the gold standard was doing exactly what the founders wanted, which was limiting the ability of the government to expand.
In today's news recap, higher supplies to the UK lift Swiss October gold exports. Gold exports from Switzerland rose in October compared to September due to higher supplies to Britain, but were down from a year ago as high gold prices kept deliveries to China and Hong Kong subdued. Swiss customs data showed on Tuesday. Supplies from Switzerland, the world's biggest bullion refining and transit hub, to Britain in October reached the highest level since June 2021, according to the data. London is the world's largest center for over-the-counter trading of gold. This year's 27% gold price rally, which took spot prices to a record high of $2,790.15 per troy ounce on October. 31 has been affecting physical demand in China, the world's top consumer of the metal. However, gold exports from Switzerland to India, the world's second largest gold consumer and a major importer, rose in October from September amid festival purchases. Before we jump back into the clips, check out our exclusive Black Friday VPN deal. A good VPN is essential for keeping your data private and secure. And with this deal, you're getting top-tier protection for just a few bucks. It's fast, reliable, and a no-brainer at this price. Plus, you'll get 3 extra months free and a 30-day money-back guarantee. Check the link in the pinned comment. Don't miss out.
The absurdity of what's going on in Bitcoin and with MicroStrategy stock. And, what may be even more absurd about the absurdity is that nobody is talking about it. Nobody is pointing it out. I mean, I've never seen anything like this. I mean, yes, it's been going on for some time and building, but at this point, there should be people calling this out at what a ridiculous bubble this is. I went on Chat GPT. I guess I could have got on Grok, but I've still been doing a lot of Chat GPT. And, I wanted to know, who's talking about this other than me? Like, I know I'd talk about it, but I want to know, is anybody pointing out the absurdity of what's going on and the risks of wasting so much capital on such an enormous bubble? The whole idea that Bitcoin fixes everything. These guys are now talking about how we're going to solve our deficit problems with Bitcoin. How do you solve the deficit problems with Bitcoin? If the government buys Bitcoin, it's got to go into debt to do it. Although they're talking about selling our gold to buy Bitcoin, you might have to sell all of our gold. I mean, it's the countries that would be buying our gold. It would almost be an act of treason for the government, the president, to sell our gold in exchange for Bitcoin. I mean, it's like, selling the cow for magic beans, although I guess in Jack and the Beanstalk, the magic beans actually worked. But in reality, you'd be conned. And so it doesn't solve the problems. It actually makes them worse. The more resources we waste on crypto and Bitcoin, the worse the economy gets, the bigger the deficits will get, the higher inflation will be. I mean, it's not going to cure any of the problems that the U.S. economy has. It actually helps to make them worse. But, it clearly benefits the people who own Bitcoin, who sell it at the expense of everybody else who gets stuck buying it, either because they bought it themselves or because they had no choice because the government bought it for them. But I wanted to know, is anybody prominent? Is anybody out there like criticizing this? Or is it just going on and everybody's just accepting that this is real? And so I asked ChatGPT, are any prominent figures out there who are criticizing what's happening now with Bitcoin? And it comes back and says, well, there's Peter Schiff. And then it went and told me a lot about myself. And that was it. I mean, it only came up with me. So then I had to say, well, anybody else other than Peter Schiff? Is anybody else saying anything? And it didn't come back with anybody other than it said, like Janet Yellen, Elizabeth Warren. There wasn't anybody from the investment community or from academia or, Wall Street. No, nobody was pointing out the absurdity of what is going on here.
Could this really happen? Are central banks bold or reckless enough to make such a massive pivot in their reserves? Peter's skepticism about Bitcoin being digital gold certainly makes us think twice about how this could play out. What do you think? Are central banks heading down a dangerous road, or is there a chance they might embrace Bitcoin as a major reserve asset? And how would that impact gold's position in the financial world? Let us know your take in the comments below. If you found Peter's insights valuable, don't forget to like, subscribe, and hit the notification bell so you don't miss our next video. Your feedback helps us bring you the most relevant content. See you in the next one.